Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So actually it seems that our words on Friday was kind of the prophecy concerning the additional secret driving factor for the gold that makes it work absolutely different compared to any other market, and this is geopolitics. So actually gold was standing in the same trend as all other currencies and assets once the release of the CPI has happened, once the opinions on the probable fast rate hike is exacerbated on the markets. It's that prevailing topic that probably Fed will change rate right from 0.5% right in March, which we also think so. And in general, gold starting moving with the same direction, same trend, with the pressing down a bit on the impact of this rising concern of the interest rates and changing that should change faster. But suddenly on Friday, the new geopolitical stunned news have been published. As a result, you could see drop of the interest rates, which indicates running in the safe haven assets, in the 10-year bonds, jump in the safe haven currencies, which is the United States dollar, Swiss franc, and the Japanese yen, and of course the gold. So the geopolitical factors seem so strong that they make the gold to ignore the fundamental drivers that has, but on the bearish side. So what we could say in light of this recent events, we already talked a lot about the geopolitical factor and our opinion on this factor. Well, and keep it easy, and in the 2 words speaking, we suggest that the major tensions even has not started yet. So what we see currently is just a light breeze of the possible storm that could follow. This is first moment. Second moment, it will be for a long term. This is not finished within the week, within the months, and I suppose that even within the year it might not be finished. This is second moment. Third moment, the major tensions will have no relation to Ukraine, just even briefly. So this is the major contradiction between Russia and the North Atlantic military union. So this is not a question about the Ukraine. It means that response that Russia could give will be absolutely different compared to what expected and how markets and investors see that. If you take a look at some headlines in the media and in the papers. So it means that the possible response and the possible way how it could develop, the overall contradiction and military tensions, absolutely not priced in the current market. So because it will be, something outstanding that nobody expects to get. So because currently you just could see the cliche of some previously made Libya conflict, Iraq conflict, when the military news you could see only in the papers and just light echo leads to and reach you with some news releases or something of that sort. Well, in this case, if Russia will be involved, it will be absolutely different. And I just really worry that this will happen. But anyway, it will make the very strong impact and a long-term impact. If everything goes in a really bad way, I suspect that actually any paper currency will lose its value, starting with the United States dollar, following the yen, franc, and so on. So if you would like to really invest in safe haven, just buy gold. So this is the only thing that we could say currently. In the longer term, we do not see really big alternatives to the gold, and I think that the overall policy that we see that is following the United States. First is a trading war with China using the pandemic background, making the artificial bottlenecks in the supply already makes impact on the Chinese economy. But by our view, this makes the mutual effect not only on the Chinese economy, but it makes life inside in the US more expensive, because the number of the Chinese goods become narrow and they become more expensive, rivaling the domestic production and things that are made in Europe, for example, which is relatively expensive. So that in turn will push up the wage inflation and general inflation. So you can't simultaneously trying to control the fire and to add the fuel, to struggle with the fire and to add the gasoline in the fire. So that's approximately what the United States is doing right now. The Fed is trying to control inflation with rising interest rates, but the government, following the trading war and increasing the geopolitical tensions, just adding fuel to the fire. And at some point where interest rates will be around 2%, maybe 1.5%, we will see the real impact on the health and recovery of the economy. So in the long term, we also suggest that dollar should become weaker within a few years, I suppose, and gold will get the chance to creep significantly higher. But in the shorter term, we will see, as you can see, actually it's very difficult to control geopolitics moments, and probably we're going to an environment where we just have no choice but to accept the new reality, that sometimes, from time to time, we could get the events and unexpected moments that could totally break the overall technical picture. And this is just the environment where markets is functioning right now. Still, talking about our technical background that we discussed previously, we said that the 1830 level will be the vital, and the breakout probably will be fast, in whatever direction it will happen. As you can see, based on geopolitical factors, breakout has happened to the upside, which means that hand shoulders has failed. That, in turn, opened road to next standing target. First of all, it's supposedly that taking out of this top is just a question of time, which is the 1875. And next one will be 1910. This is two targets that we intend to consider. Reaching of this top is actually, well, mostly is done. It's just because here on the weekly chart we have multiple grabbers that suggest the taking out of this top. The only barrier that gold market has right now is the daily overbought, because right above this there is no any fib levels. So it's just overbought and few target stands. That's actually potential next target. This even we are not considering currently really big patterns such as this butterfly, for example, left wing, right? This might be the right wing. So in the current circumstances with the breaking of the hand and shoulders to the upside, we are not considering any bearish background. Besides, currently all trend stands up except maybe the monthly chart, but monthly chart is a separate story. Well, on the daily, weekly we have the bullish trend, and here is just daily overbought that prevents market from the further upward action. In the shadow of these events, so if we'll take a look at the 4 time frame chart, supposedly we could get minor pullback in the beginning of the week if again nothing really bad happens on the geopolitics. Supposedly market could show the minor pullback somewhere to the 1850 or 1835 area. So market should not erase the recent rally. It's normally bullish market. So we suppose that either this level or that one. 1840, 1835 seems to be more probable. It's just because market stands at overbought. So it suggests a bit deeper retracement. So that's what we intend to consider in the coming week. After that, once this retracement will be over, this probably should be starting of the next upward action. So that's what we expect on the gold market right now. Actually, you could see what has happened on Friday. Once market hits the XOP, we said probably downward action should start, and indeed it started. Market was moving lower on the background of the events that we saw, but that is geopolitics, guys. You can do nothing actually. And analysis takes the back seat once geopolitics intrudes in the price behavior. So, for more details, as usual, read our report. It's not really very big this week, but a lot of interesting stuff stands there as usual. So, and let's keep watching what performance we will get on the next week.